We're really pleased with delivery in 2024 on the top line. The businesses are performing well. Client engagement's very high. The revenue growth that we were looking for, we achieved. We'd set a goal of 30 billion for the year in revenues, and we slightly exceeded that. And as you will have seen in the fourth quarter, especially the investment bank at 30% year on year, our asset management business at 22% year on year, you're seeing that revenue momentum that we believe and we're seeing carry forward into 2025. So on that level, everything is going as we planned. On the expense side, operating expenses we did what we said we would do a year ago, which was run the company at a 5 billion per quarter and bend the curve downwards in the fourth quarter. We're pleased with that performance. What we also saw was a very high level of non-operating cost in 2024. And the good news about that is, call it the silver lining, is they're behind us at this point. And we're running into 25 really unburdened from those costs. So that's the setup for us. You asked about what it's like to be Germany's largest lender. Look, it's an interesting time. The German economy has been essentially stagnant for 2 years. We are working to help clients through this transition for the economy. Energy costs, interest rates, supply chain changes, geopolitical changes. Those are all things that are playing through our business and playing through the businesses of our clients.
Let's take a look at the so-called one-off costs, which are, of course, a burden for your bottom line. How often, again, do we see that with Deutsche happening? Because in the past, there were quite a lot of years where we had one-off expenses.
Yeah, look, we are not happy with one-off expenses or surprises, and most of these things have really been, we often call them legacy cases, but issues arising from the past, sometimes the distant past. The Postbank takeover litigation matter in 2024 is a good example, which on a net basis represents about 900 million of costs in 24. So in a sense, the only good news thing you can say about it, it's behind us, and importantly, therefore, the risk profile of the company is dramatically changed as we go into 25 relative to where we were a year or 2 years ago. And so to your point about surprises, the number of matters that are out there that can throw surprises, it has diminished. It's gone away, essentially. And so we can look to 25 with just a lot more confidence that there won't be surprises and or sort of unknown unknowns, put it that way. So yes, we're unhappy with that part of 2024, but feeling much more confident about delivery, therefore, in 25.
It looks like right now that the US is the place which is growing the most among industrial nations, at least. So what are your plans to expand your business there to benefit from that momentum?
Well, look, we've been investing steadily in the business over the past 4 or 5 years and in the United States. So it represents about 20% of the company on most measures, balance sheet, revenues. What's exciting is it's a cumulative investment that we see pay off. So you've seen, for example, in hiring bankers, corporate finance bankers, we've increased that footprint, and so we expect to benefit there. Similarly, on the market side, we've been making some really strategic investments, and we're seeing that pay off already. And some still have sort of room to deliver and crystallize in the future because they're more recent. So we like that profile of investments and our ability to lift not just the U.S. business, but the impact the U.S. business has on global activity, whether that's institutional investors or corporate investment going in either direction across the Atlantic or to Asia.
U.S. peers, or your U.S. peers, I should say, are very upbeat about the outlook. So do you share that optimism?
Well, we do, at least in the part of our business that's in the United States. But also thinking about Europe and especially Germany, we also share the frustration that I think is pretty pervasive in Europe, that growth has been relatively stagnant over the last couple of years as Europe has worked through a transition on a number of items, energy costs, inflation, interest rate cycle, and what have you. And we, again, here share the views of our clients. We'd like to see a policy mix that focuses on growth and competitiveness in Europe. I think that's possible, and I think what's encouraging is that the political will seems to be there to a greater extent. But we absolutely need that in Europe. And so the optimist in me says that the sort of competitive spur coming from the United States can potentially lead to some positive change in Europe.